Good morning. It is Friday, March 22nd, 2024. It's going to be a good Friday, no matter what. Um, well, I might jinx myself by saying that, but on every Friday, as long as I can remember now for the past 2 years, I have put spreads expiring. And some Friday, I might have two or three, sometimes as many as five put spread in danger. By that I mean they are near the money or in the money where I either have to watch them, close them out early, or roll them into next week. Well, this Friday, at least as of right now, I have nothing anywhere near danger. On any given week, I have anywhere from 15 to 30 put spread expiring. So, yeah, it's a lot to have to watch. I don't mind it, but it's always good to go into Thursday night knowing that there are 20 plus put spread that are nowhere near the danger zone. But let's get right into it. LULU report earning last night. I put on an order and walk away because the action after hour was not as bad as it is in pre-market. I think the after hour low was for, well, let's take a look. Why guess? Why guess when the data is here, right? All right. So the after hour low yesterday was right, was here. I guess right here was around 425 ish. Okay, and now the next day, this morning so far, is down to 417. My order yesterday, I need to look it up, but it was below 425, of course. Where was it? It was, of course, right where it is now. So if where it came down last night, my order was 418. Okay, why 418? First of all, I want to use the 200-day moving average as my protector, right? For those that have been following the earnings seasons in the last 4 or 5 weeks, what have we seen? From Snow to Palo Alto to Z scales, you name it, right? We have witnessed many earnings, especially the one that had not so good guidances. And sometimes the guidance can be okay, all right? Sometimes the guidance is not, forget about current earning. That's one of the things that I want to at least address. The market will react a little bit to what the number is for last quarter. Like when they came out with earnings, oh, they beat by X dollar on revenue, they beat by a few pennies on the earning, blah, blah, blah. Yeah, the market is okay with that. But most of the attentions are always paid on the future guidance. Most. It's always irked me after years and years and years of following, decades of following this market. I can always tell when someone is either not seasoned, fairly new to the market, or willfully ignorant. Yes, willfully ignorant. There's people that I know that follow the market for years, if not decades, and every time a stock come out with earnings and the guidance is poor, but the current earning of last quarter was good, you're gonna hear or see the comment that they talk about or post online. Why is it down? They beat earning. Why is it down? I completely ignore the poor guidance. It's cringy to read those kind of things because those are the kind of people that lose money in the market. Willfully ignorant, especially if you're not new. If you've been doing this, follow the market for years, if not decades, stop being stupid, okay? To be blunt. While LULU earning was good for last quarter, but the guidance was awful. I posted in my private chat group last night. at 4:05-ish. I said, stay out. Okay, I said the first half an hour after earning, when it was um, yeah, when the first half an hour when it was down here in the 4:30, I said stay out. I said do not buy this. Okay, the earning was awful. The guidance was awful. Well, the earning was okay. The guidance was awful. They guide down on earning and revenue for next quarter and for the year. I think either way, it was not good. So I left my order at 4:18, and I'm glad it didn't take place. Now let's take a look at the chart. Is it a tradable bottom? Well, I think it is. Okay, I think first of all, let's draw in the let's draw in the zone. Okay, because that's what I like to do. Right. First of all, that was resistance, and then a gap. So you have a gap fill right there, and then of course it's confluence with the 200-day moving average. So that's a decent spot. All right. So what would I do today? Assuming that it's going to trade in that range in the 417, 418 put spread. Same day expiring put spread I will play. Where? Most likely 410, 405, right? Now, if of course if there is better juice or enough juice for 400, 395, even safer, right? There's no need to take on additional risk. You never know. Okay, we have seen this play out with Snow, Palo Alto, Z-scale, you name it. It can get ugly, even uglier than what the pre-market looked like. But for now, I think 405, 400 is in play for same-day expiration for me. I like it because it's kind of lined up with the previous high, right? So if you look at this, there's a previous high here. Where was it? Is it right here where it is 406.75, just under 407, all right? And then you get the gap right there. It gapped right where the high was. And then there's a check back to fill the gap, kind of, and then off it goes. So yeah, I like the play there. Would I buy the dip? No. I would just play the put spread. I wouldn't touch the share outright. But yeah, that it's ugly. Okay, when is the last time that LULU fall to the 200-day? Well, we see it right here. The last time, well, it's here. It almost, well, it touched here. You can say it touched here. So yeah. For the Brave, if you want to buy the share outright at 417, maybe that could be the bottom. But my advice: wait until next week. Okay, it can go down here, and if you want to take a tiny position just so that you have a toe in the door, that's not a bad thing. But trade small. I do the same thing with Palo Alto, Snow, Z scales, right? I took a very small position. By very small position, I'm talking less than 5 shares or 5 shares. Just something small in case that's the bottom. And if that's the bottom and it bounces, I don't mind taking profit on 5 shares and $5 higher by lunch, okay? If it not the bottom and it keep going lower, then I wait for stabilization and then add more shares. That's the strategy. And at the same time, sell more put spread below to collect the premium, right? So that's it. Done with LULU. Let's talk about McDonald's. Okay, first it came down, violated support a little bit, which is okay. As always, a violation of a support does not mean an outright sell. Okay, it need to show that it can bounce. Like watch, came down, violate does not mean that it's all clear. Came down, violate. Okay, and then if so the second, third time, then it's bad, right? So yes, this is a warning. Now, if it come back and hold, then I buy the dip. But I would set my stop where? Where would I set my stop? Down here, okay? 278-ish would be where my stop would be. So would it, if it come down to 282, where I had the order, down to 280, yeah, I would buy a few share, but my stop would be very tight at 278 because if it violate that low, we can have one of these, okay? Now, I don't know what the catalyst is for one of these, but would you rather not eat $30 of pain? I say so. Who want 12% of pain? I don't. Nike, bad earning, weak China, weak China, ugly, okay, ugly. Now, there's a white line. You know, the white line means important line. If I was to play today on same day expiration, it's gonna be 90, 87 put spread, right? That's what I would look. If there are lunch money to be made on the same day expiration on 90 and 87, yeah, you get a gap fill to protect you, as well as this white line. Now, what is that white line? What is it? Is it some kind of serious trend support? Let's back out and take a look. Yeah, look, bang, bang. All right, so yeah, can they get down there? 93-ish, 93.5. Yeah, that would be the spot to nibble shares if you want to take a shot at Nike again. Okay, I have traded Nike and failed. The last time I traded Nike on the last earning was a failure. Okay, it was a failure. I nibbled a few shares on this downdraft, right? And then I suffered the pain here, and then I suffered the pain, and then I said, "That's it, get me out." Okay, after this support here and this move to 10, I think I get out at 105 something. Sure, did I lose money? Yes, I lost $5 a share because I paid closer to 110, and I said, "No, I'm out." So I'm kind of glad that I am out on this. But would I buy at 93? Yeah, a few share. Would I add more at the gap fill at 90? Yeah, if it violate that. But for now, I think the, the thing to do is sell a put spread at 90 today, and then let's see where it stabilize next week. But yeah, it's ugly earning there. Let's end. Let's do more. There's Coke and then ACN Essential. Let's move on to Coke. Coke, I'm mildly bullish here because of the action that I see at 60. 60 was the line in the sand. Let's change that into a white line, okay? Going forward, I'm going to try to be consistent of what I think is a key area, the white line. Now let's go back 3 years to see if that's the case. Yeah, it's you can call it a zone, okay? Between 57 and 60, okay, if you want to, or at least 59 and 60, okay, it's a zone because it came down, bounce, didn't hold, bounce in that area. So we are at that zone between 59 and 60, okay? That has been the area of support. So the more it stay here, the more likely it can get to 64, 65. Okay, so the path of least resistance is higher if it keep bouncing here on. Basically, if you're looking at fundamental TA, buyers are coming here to buy the dip. Okay, there's not that much of a dip, because if this goes sideways in this range now for literally 3 months, yeah, it's there. Buyers are there, right? Now, it's just the things that I care to jump in, a few share here and there, but the upside, 8% ish, right? It's not like huge. It's not huge money, 5%, 6%. Now, can it get beyond 65? Let's see. Let's go back 3 years. Yeah, there can be a 10% move, right? So we'll see. But for now, if it can break, next up 63, and then 65, and then 67. There's 3 levels. Let's end on ACN. Accenture came out with earning, got the big ugly stick. Woo! Yeah. Is it random where it stopped? Let's take a look. Well, first of all, it's not, well, it's kind of random. There's no really, if you want to take a look and, well, if you look at this and see that, yeah, that was a slight area of consolidation, and then up, and then no. Okay, so it's kind of not really in any spot, no man's land, as I would call it. So I would not advise anyone to jump in and buy here. Now, if it bounces over the 100 MA and prove that it can hold the 100, then yeah. But for now, the right play yesterday for me was to sell a put spread down here. I sold 330, 325, right? Because then I have this just right here. Let's draw the zone. And the reason why I did a 330, it was a very small premium, okay? But yeah, look. Check back, okay? So can it eventually get down there to 330? Possibly. Would I buy some share at 331, 330? Yes, okay? So that's the play on Accenture. If you want to sell put spread, 330 and below. If you want to buy share, 331, 330, yeah, wherever that is. And then, of course, the 200 moving average will rise a little bit more. But for me, it's easy buy down here at 328 to 331, right? That's the zone. That should be the strong support. Let's go back 3 years before we move on to see if it's a random spot. No, it's not. Let's extend it, okay? Let's extend the drawing. Look at that, okay? I like it. And that's it for today. Good luck. It's Friday. Enjoy your Friday. Should be a fairly, is it going to be a mute kind of day? Hard to say, okay? Hard to say. But at least for now, at 7 a.m. in the morning, I don't see any immediate danger in my portfolio.